Welcome. Don Luskin, it looks like a game-changing event. It looks like there's a sea change going on in the marketplace. It looks like the mere hint and possibility that the Fed is coming to the end of the easy money road, that the U.S. peso may turn back into the U.S. dollar, is knocking gold down, knocking commodities down. Now, I believe you have something to say on this subject as you have in the past.
I've had something to say on this subject for the last 6 weeks. This all turned around on Bear Stearns Monday and FOMC Tuesday, March 17th and March 18th. On March 18th, the Fed defied market expectations by cutting only 75 basis points instead of 100. On the day before, they'd introduced all kinds of wonderful new credit facilities to deal with the credit crisis directly. That takes the worst-case inflation scenario off the table. That's when gold topped out at over 1,000. That's when the dollar bottomed. The world changed then. That's when the dollar turned around. That's when stocks turned around. That's when commodities turned around. That's when the recovery got started. The Fed needs to follow through tomorrow. They need to cut no more than 25 basis points, ideally zero. They need to at least signal clearly that they're going to pause. Ideally, they need to signal that they're going to halt. And let me tell you, if they give a negative surprise, if they cut rates by zero, and if they say, we're done, that's it, just think, 3 months ago, that would have been Armageddon. The Dow would have been down 1,000 points. There may be a brief shock if they do that, but within 24 hours, if they do that, the Dow will be up 1,000 points. Mark my words.
Well, it's very interesting. We're going to put a chart on the screen. Money market rates are now pricing in a higher federal funds rate, if not by the end of this year, certainly well into next year. In fact, it's already pricing in a 75 basis point interest rate hike in 2009. It also is pricing in a 2%, which would be 1/4%. So, Herb Greenberg, what do you think about this new Fed king dollar scenario that seems to be unfolding? A sea change with commodities down across the board. I mean, it's interesting. You can look everywhere. I mentioned the gold. Gold dropped quite a bit today. Weyerhaeuser, U.S. Steel, Baker Hughes, Metals and Mining, Herb, Alcoa, Allegheny, Chemicals, Archer Daniels Midland. You know, all the hot basic material stocks plus all the oil energy-related stocks all got slammed and have been looking pretty shaky. What do you make of this? First of all, do you approve of one and done and a king dollar?
It's just Tuesday, Larry. Do I approve of it? Yes. I've never been a big fan of sliding rates here. I've talked about it being pushing on a string and the rest of that. Now, here's the question. To really right this economy, to really get this thing done, don't you still have to have a total washing out of a situation that could come with rates rising? But let me ask you a question. I'd love to know what my friend Don Luskin thinks of this one. What's to say that rates don't start going up and going up and going up to really right this thing? How high is too high? I mean, we're starting to reverse the trend. I just want to know.
Don Luskin?
Well, I can tell you this. We're probably going to 2% tomorrow, and that's too low. There's no reason to be at 2%. If you look back at the history over how the Fed got to even a 2.25 where we are today, a lot of that was a mistake. A lot of it was bad judgment, because they should have put targeted credit facilities like the PDCF in place last August instead of last March as a force majeure measure to deal with the Bear Stearns problem. The rate cut in January, that emergency intermediate cut, that was an accident. They did that because they thought world markets were collapsing. They didn't even know that it was a rogue trader at a single bank in France. So we have gotten where we've gotten as a result of stumble-bum errors by the Fed. They finally groped their way through the darkness, found a way to get it right. We need to take back those errors. We need to get back to something that looks like equilibrium interest rates.
And
we are miles away from prohibitive rates that would slow the economy. Miles away.
Isn't it?
At a 0% growth rate, at a 0% growth rate in an economy that should grow at 5%, how could you sit there and tell the American people that everything's fine?
So anything, wait a second, Joe, let's get this clear. Are you standing by the statement that anything less than 5% real GDP growth is a recession? Is that your definition of victory on your recession call? Give me a break.
What's the Fed thinking if they do that? In other words, you as an absorber of Fed information and so forth, is the Fed telling us that we're not in a recession, that the economy's not so bad, that the housing crisis is overbaked? Is that going to be part of their thinking, or is it a straight inflation worry? I'm trying to figure out, what are they going to tell us if they say tomorrow one and done?
Look, as proudly as a reporter for a few more days, I will say they're telling you they don't know what the heck is going to work, because what they did before didn't mean anything. And I have to say this one thing on the prior argument that Joey B was in, and I support Joey B fully here. Let's not forget, a bunch of Nobel laureates, Warren Buffett, they're all telling us we're in a recession. Hey, I'm just a reporter.
Please, those same Nobel laureates who ran long-term capital management,
please,
same Nobel laureates who were all just on the Clinton and Obama campaign. Give me a break, Herb.
Oh, Don LaFact. Oh, by the way, Don.
Herb, the Nobel laureates who say we're in a recession get on TV, and the ones who don't get on TV.
Well, let me ask you, what about that guy?
If they're the authorities, let's have them get on this show instead of you, Herb. What is your opinion?
What is my opinion? My opinion, as I told you last week, is I do believe we're in a recession because I can go outside and take a look around the block I live in, for God's sakes, Don. And let me tell you something. When you see the gas prices at $4.16 a gallon, if it ain't the first quarter, and unless those gas prices come stumbling down, I guarantee you we're going to definitely start seeing signs of the numbers that are going to show you we are or were in a recession. All right,
Don. So now it's a forecast, whereas just a minute ago you said you fully agree with Joey B that we're already in a recession. So which is it?
Hey,
a forecast or a foregone conclusion?
Look,
Make up your mind.
I really, you know what? I really appreciate those kind words you had for me in your blog this morning. That was really great. Over the past few days, I really do appreciate the publicity.
Like the one on your blog where you called me a crackpot?
No, I said some people might call you a crackpot.
Gentlemen,
very big difference.
Gentlemen, let us stay on message. You're doing extremely well. You're making a lot of important points. One word: bull or bear. Right this instant. Bull or bear. Don Luskin.
Bull.
Jerry Boyer.
Bull.
Bull. Herb Greenberg.
Bear.
Joe B.
I'm essentially neutral right now.
Neutral. So we got two bulls, a bear, and a neutral.
Well, if you said I could be neutral, I would have been neutral. But you said bull or bear, so I'd go with Joey B on that. Definitely neutral.
Actually, let me revisit that, Joe B.
Profile and courage.
What, Joe B? Here's the.
Tell Herb he can
Joe
be
B,
maybe
this
neutral.
is a binary. I'm asking Don Luskin on this program. Given today's trading with the collapse of commodities and commodity stocks, is there a game-changing policy that is developing, Don Luskin? That's the stock market question.
But I agree with Jared. Believe it or not, and believe me, it tastes like eating one of those Haitian dirt cookies to say I agree with Jared Bernstein. But he's right. The play is with the Fed. It's not with the president. It's not with the Treasury Secretary. Right. The dollar's been appreciating for 2 months because 2 months ago is when Fed policy changed.
Hang around, Don. Your education is not yet complete.
All right. I can't agree. And if it is a sea change in Fed policy, if it is a sea change, and the commodity inflation is coming to an end, what's your investment strategy?
Well, you've got to get out of the stuff that's worked through this whole bull market. You've got to get out of energies. You've got to get out of basic materials. You've got to start getting into the growth stuff. You've got to start getting into stuff like technology. You know, I think a real sea change, not just from March 17th and Bear Stearns Monday, but another sea change was 2 weeks ago when Google came out with that big surprise on the upside, and the stock was up more than 10% in one day. What the Fed did on March 17th restored the market's willingness and ability to take risk. But what Google announced 2 weeks ago was the reward that investors can get if you take risk. So the game is afoot. Take the risk, make the gains. The Fed, Google, it's all coming together.